Hi guys, this is Simon with Trade and Perform Coaching doing the trade review for Tuesday the 26th. Um, so let's jump right into it. Obviously we had what would eventually look like for the most part was a trend day down, right? Very dramatic open where we drove very hard to the downside out of the gate. In yesterday's trade review, I covered a couple of important things. First, I covered the volume profile, and I pointed out in the volume profile that we had been trading and consolidating in a very tight range and had been in balance all of last week, right? And in balance, a couple of things happen when we're in balance. First of all, traders tend to take very small rotations because they're forced to. That's what they have to do in order to make money. Number two thing, very, very important, is that they um, tend to get used to coming in and out with very tight stops, right? And number three, they get comfortable trading very early in the day because there's no worry about getting run over, right? We really don't run too far down, we don't run too far up. I also mentioned that there would be two characteristics of whether or not we would have a balanced day or non-balanced day. If we look at the um, if we looked at the balance area, I said that if we were able to gap below, we could have traded through, but it would have been better, and I was clear about that. If we gapped below 2120 or we gapped above 2132, that would be indicative that we were due for a range extension, right? And that gap, right? There are several conditions I said. First of all, that we opened below or open the 2120 or above the 2132. B, that both NQ and ES were in sync. We definitely had that this morning. And then the third key, and it was very, very important, that they both held below those key areas in an ES in particular, 2120. And then lastly, the NYSE tick, right? That the tick, if we're in balance, is one of the key elements of being in balance is that the tick will stay at plus or minus 500 through the course of the day, right? Well, right out of the gate, first of all, we opened below 2120. We had the first element there. Secondly, if we look at NQ, right, we can see that on NQ, out of the gate, we gap below Friday's low. We actually backside tested it and then immediately drove lower. So we have two of the elements. If we look at the 1 minute chart and the 1 minute tick chart, we can see here we opened, if we go back far enough, we opened right out of the gate at a negative 1200. Now, one of the big tells out of the gate is when we open with a negative 1100, 1200 tick. If you've been trading the market for any amount of time, you'll know we usually get a pretty strong response in the bull market out of that. You'll see a push up for 5 to as much as 15 points. We've seen all that in the past 6 months. We've seen that within this year, right? Immediately you see that the tick starts ticking up, but look what happens to ES. As the tick is coming up, let me draw this, okay? Tick is coming up right here. Let's change that color. Okay, and you see the market initially tries to push up with it, but then you see very quickly, even though right here we start to diverge, even though it's continuing to make an upside push, ES very quickly begins to roll to the downside, right? So tick negative outside of the plus or minus 500. In addition, for almost the entire morning, the first time that we get positive is after, and barely positive, is after the first hour of the day. So we have three elements that immediately told us we're going to have to shift gears here, and that's exactly what we did. So in the room, I immediately noted potential, because I didn't know for a fact, right? Anyone who tells you they knew, okay, we never know. We just have clues, and then we adapt to what we see. And then the last piece that I mentioned last night was that the range within the first 30 minutes to an hour would exceed really 8 points. If it exceeded 8 points, I knew I had the potential of having a wider ranging day, that I really wanted to key off of at least 10-point rotations if that was the case, right? And that I'd want to look for tick divergence and or a move to the open gap. And then I finally mentioned, if we go, and the video is still posted right below this video, and then I finally mentioned, and let's go back to today's date, was that we had the potential, if we squeezed enough, that I thought it would be difficult. That's NQ. Let's get over to ES. That we could squeeze all the way down to the open gap. And I had mentioned that would be a pretty big stretch, if we got down to 2095, considering where we closed at, which was 2124, that would be a 30-point stretch. It's really hard to stretch beyond 30 points intraday in the ES. Okay. All that being said, when we opened, I immediately called, these are 5-minute bars because you can see it looked quite different on the 1-minute bar. I immediately noted that we had potential open drive lower, that we had economic data coming up at 9 a.m., and we obviously took a pause right into that economic data. This is where I'm referring to right here. But at this point, by the time the economic data came out, we had a clear open drive lower. Now, here's where the challenge comes. If your head's still in, hey, we're having a balanced day, you're trying to get long in here. And there's nothing wrong with that, right? If you look, this made sense from my basic trading rules. First of all, we knew to sidestep. This is the first 15 minutes. No big deal here. We knew we had the gap down. We were below 2120. We knew to have caution in this area. When we get to this zone, you can see we hit this 2109.75. We have 5, 10, 15, 20, 25 minutes. Even if you took the top of the zone and you didn't take the profit off the top, off the bottom, I do put a time limit on each one of these zones of approximately 20 to 25 minutes. At worst, you should have suffered a 2-point loss. However, I cannot emphasize enough that skipping the first 30 to 45 minutes, and particularly once you've already identified that it's a clear open drive lower, the easiest way to do it is just to skip to the end of the first hour. If you did that, right, if you did that, you did not get run over at all. Now, I can tell you, I took 2 speculative trades on reduced size with tight stops. On one trade, I think I stopped out for a tick or 2 ticks, and on the other trade, I took a 2-point stop. Okay, so yes, did I try to fish it back to the upside? Absolutely. Out of this key level here, and I believe I even pushed out of this 2105 area as well, and I ended up flattening out on the trade, right? The next question you have is when we're approaching the zones. The idea behind the trading that we've had is, and behind the zones, is that we have a predetermined location where we want to take trades. We have a time span at which we allow the trade to work from a day trade standpoint, right? We have a certain stretch that we're looking for. And the last piece is we have a way to control our losses and gains so that we don't get run over emotionally or mentally, right? We know that we're prepared to take a loss. The first key in trading to be successful is that you've taken a trade and you've accepted that that loss may be realized. We're not afraid of the loss. It's part of the trading. When you have a high win rate, you know that you have an acceptable stop. Okay. So next, if you took this zone, best case scenario, you made a slight profit. Worst case scenario, you may have stopped out for 2 points. And the majority of the people in the room, at my encouragement, skip the first half hour. And if you did that, you did not get smoked at all. Once you identified as an open drive lower, by the time we got to the first hour, this zone, right, had already been tested. This is the first time into the zone. We come in, we rotate up, and we were able to accomplish a 2-point rotation from the top of this zone from 2105.50 up to 2107.50, right? Even with looking at that, let's erase that and let's look at this area a little bit closer. Well, you know, the way they have this, it's going to be a little bit hard to do that, but we're going to look. First time into the zone, you start the timer, 5, 10, 15, 20, 25 minutes. By the time this 25-minute bar closed, right, one of two things. You either could have gotten out of this trade break even, you could have moved your stop to the swing low, hopefully you still got out break even, or at a minimal loss, or you took your profit on this swing up. Ideally, you took the 2105.50, you exited at 2107.50 because we tagged 2107 and 3/4, right? And then you moved on to your next trade. This is really the second move into the zone. That zone busted, right? If you're not trading until 9:30 in the morning, you're not looking to take this second move in. I want to be clear about this. This is your first move into the zone. This is your second move into the zone. That's the zone that busted. We come almost all the way down to 2100, right? 2100 is a psychologically important area. It got front run, right? People were pressing pretty hard. This is the first short squeeze of the day. It also coincided with London close. I pointed out at London close almost every day that time frame is predisposed to having an upside rotation. We came up into New York lunch. We knew that we had a Fed speaker speaking at 11:30 Central, 12:30 Eastern. Once he spoke, we got one more push up. He spoke. It was exhausted. The market then goes, and what I thought all along, which was we were going to make a move finally for this 20.95 and a quarter. Now, this is where things can get a little bit frustrating, right? First of all, when I have a single point on a chart like this, that means the tolerance is plus or minus 1 point. So the zone was technically 2101 to 2099 even, right? So this zone gave a rotation. This zone, first time to this area, obviously gave a very nice rotation up. This is second time into this location. It's not the trade we're looking for. It comes through, and now we're sitting here and waiting until we get down here for a long. Now again, do I call other trades through the course of the day, or do I take other scalps through the course of the day? Sure, absolutely. I have no problem saying that, right? These zones are simply my base trading program. This is where I know I have very high odds of taking a trade and achieving my 2 points. So, what happens when we get down here? First of all, the day looks like doo-doo, for lack of better language there. It looks like doo-doo when we get down here. The market really looks like it wants to at least come and test this open gap, if not flush. We're heading into the last hour. I emphasize this all the time. The last hour is a wild card. The market very rarely closes on the low. These are all little things you should know if you're a professional day trader to maintain your consistency through the course of the day, the week, and the month. It does you no good to trade one day well if you give it back the next day. You have to build consistency. So, we know markets very rarely close on the low. I simply chose, and I put this out in the private Twitter stream, I said, if we come into this 20.95 and a quarter, and it's the last hour of the day, I will simply not take the long. As a matter of fact, I want to show you, I did two things that I said that were very, very key and very, very critical for my day, and I think probably for the people that follow me. First of all, if you look, I've already posted the charts for tomorrow, and I put, okay, so this is going back 8 hours ago. It's currently 9:27 p.m. my time, so 9 hours ago would have been between 12:30 and 1:30 today. And I said, okay, this was right before we head into the last hour, and I said, this is the exact environment I have to curb my bearishness, for better or for worse. It's rare to make money shorting the last hour when we're already down 25 points. Now, that is powerful. That makes up my entire day right there. Means that that's the difference between giving away your whole day, staying short the last hour, and getting wiped in an 8-point counter rotation for what is overall still a very essentially bearish day, down day, right? But you didn't get your profits wiped out, right? And then I also said, I said a couple things. I said the day after trend day tends to be much more tradable. And then I said, okay, so this was really towards the 1 o'clock hour, and I said, heads up, for better or for worse, I'm not taking the first move into the open gap on ES. I want to see the price action there first, meaning I wanted to see, did we have an increase in sellers or a decrease in sellers? Did we have a tick divergence? Did we have anything, even a small 50-60 retrace, meaning we get responsive buyers, and then I have a good way of placing that trade and getting a quick retrace back down. Anything to help me out, meaning on a 50-60 retrace would look something like this. Let's see if I can find it really quick. Drawing tool, here we are. So what that would mean is we come in here, we come up, and we retrace about halfway and push like this. Now, do I risk missing this entire move? Yeah. It could just come down and shoot out just like that. Then I get nothing, right? Essentially, we got that 50-60 retrace with a slight push. If you look, traders, there was essentially what happened here, where too many traders were short here. They front ran the open gap. They came in, pushed back up. We got a 50-60 retrace right here, pushed back up, and then they made one push. We two-ticked the low over here, unable to hit the gap. When it was clear that we were unable to hit the gap, short covering came in and pushed us up for actually pretty good rotation higher, almost 8 points right into the close of the market. Okay, so going through all that and thinking through that entire process, right? That takes a lot of work, right? that wasn't easy to do. And the first clues when we were constructing the day, and I want to go through this, was that we knew we had open drive lower. I was calling live in real time in the room, caution, as early as 8:40 in the morning. Caution, potential open drive lower. I did take longs, but I reduced my trade size, right? And I also took somewhat tighter stops in those areas, meaning it had to work right away, right? And I was able to control my downside significantly. I didn't call out many scalps after that. I did have one short in NQ. I tend to not call out my NQ trades anymore in the room. I want to stay focused on the ES, right? The last piece is, even though none of the longs really truly worked, right? The question is, on a day like today, if you live to capture days like today, these days like this are very few and far between, right? My objective as a trader in terms of my long-term health is simply surviving it. That means, do I take either a small drawdown or do I break even? One of the two. Either one is an accomplishment for me. I don't force myself to try to have this short out of the gate because, A, the majority of the time, if you try to short the open gap down, the majority of the time you're going to get run back up to the gap, to either half gap or gap fill. You're going to get stopped out. So I don't worry about it. Number two, trying to pick a bottom in a market that's moving straight down is a formula for getting smoked each and every time. It's very, very hard, right? But the zones did their jobs. If we look, we obviously avoided this. This is in the first 15 minutes. First time in, this zone did its job. 5, 10, 15, 20. You either lost in this area, you should have either lost 2 points, 1 point, or gotten out break even. Next time into the zone, you should have been able to achieve 2 points, right? And then finally, again, this is following my most basic trade plan. Into this area, this 2100, right? First time into 2100, we get a rotation back to 2105. Into the Fed speaker, that made perfect sense. Fed speaker finishes, sellers come back in, they push down. The only area that I found that was really mind-boggling, or not mind-boggling, but surprising, is I really thought we had enough sell pressure to come in here and get into this open gap, maybe even bust behind the open gap, and then make the rotation up. We didn't do it. Now, one last word as far as that goes. Usually when we miss the open gap like this, we'll either come back in the overnight session and tag it and come back up, or we'll tag it early in the morning, complete the auction to the open gap, and then make a push back up. I would look for that trade tomorrow morning. So where does that leave us going forward for tomorrow? So I've already posted the charts for the members. I'm not going to go over the charts for tomorrow. That's some of the stuff you have to leave for the paying members, right? But I will go and look at the volume profile and take a bigger picture look. So we've broken from balance. What usually happens when we break from balance? Let's go see what happens, because we have a pretty easy way of telling historically what happens. So if we look at the upside, where we have more recent pictures of that, we had essentially, let's call this 2 days of balance right in here, right? This day was really an open drive higher. We balanced for 1 day, 2 days. We balanced and broke out right at the end of the day on this third day. Market drives higher, comes back for a backside test. Then what does it do after the backside test? Pushes back up, right? And then what you'll notice is left a lot of poorly auctioned area right down here at the bottom. We came back in and re-auctioned that, and then we made a push higher. So that's the first example we have of what it looks like when we break out of balance. Next day, what did it look like when we broke out of balance, right? So we really don't have a lot of recent examples of true balance forming. Let's see if I can find it here. Here we go, very easy. 4 days of balance, break to the upside, come back for a backside test. Notice it took from the day it broke, 1 day, 2 days later we come back in and test, right? So if you flip this upside down, it would look like balance is up here, break, and over 2 days it comes back up for a test, back up into this structure, and then what did it do? It rotates up. So in this case, if it were to follow this model, we would then rotate down. Very important. I do think we'll get a retest back on that upside at some point in the next couple of days of somewhere between 2115 and 2119. That's easy enough to see that happens repeatedly, right? And then let's see if we can find one more example of where that's occurred. And this is a great example right here. Here's your balance, like here. This almost looks identical to what we just had. 1, 2, 3, 4, 5, 6, 7 days in a tight range, right? We gap down. Here's the gap down. Push down. Then we actually, in this case, closed up near the high. We come back for a backside test of this structure, and then we gap down, and that started our downside move. The other important thing to notice is that from the time we reached the top, the last time we tested the top, till the time we reached the bottom, it took 1, 2, 3, 4, 5, 6, 7 days, right? Within those 7 days, notice, and I pointed this out in last night's video, and we'll always hammer this, right? How many of those days do we close even near the low? 1 day, at the low 2 days, at the low 3 days, and that's it. Out of this entire move down, 3 days close it to low, everything closes up, and then obviously we re-auction this all the way back up again. The other thing to notice of this is the market likes to do this constantly, right? Even if we end up going lower, it makes these V-shaped moves. I'm prepared for a V-shaped move, and I know up around somewhere between 2119 to 2120, maybe even closing the gap from Friday's close, right? And then rolling to the downside is certainly a possibility. On the other hand, what's our other option? We can come down to the open gap tomorrow, complete the auction, and then make that push to 2119. I do not think the market will roll just straight to the downside. I think that we'll get a market that looks a lot like this. Okay. Secondly, no significant damage. It's important to note. No significant damage has been done to the market. Okay. If you look, all we've done, or all we've accomplished, is a break from balance, and we've released the energy that built up in this area. But if you look from swing low to swing high, let's get this formatted really quick. Okay, so let's get rid of that. So from swing low to swing high, what do? We came right back to the 50 retrace. The open gap was right beyond that 50 retrace. We came back to a 50-60 retrace, right? And we've released the energy that's built up. Nothing bearish has happened yet, right? If you want to see what that looked like in a similar period of time, if we scoot down the street and we look over here, you'll see from this move here, right, to this move here, here to here. What does the market do? Pulls back just in front of the 50% retrace, pushes up, then it pushes a little bit higher. We tease ourselves, we get just behind that 62 retrace, and we very quickly find responsive buyers, close back at that 50% retrace area, and make a push to new highs. So, by no means do I look at what happened today and go, oh, it's bearish, or oh, it's all over. All we know are the facts. The facts are that the energy's been released to the downside. All right. I expect at some point, hopefully soon, a retrace to this 2120, probably up into this open gap right here, and that we still haven't closed this the open gap here sitting at 2095, right? And then if it got really sloppy, maybe we get down to 2080. But that's all I'm really willing to bet on to this point. And then we'll play it by ear. If we gap down tomorrow morning, what are we looking for? Again, is it tick plus or minus 500 out of the gate? Are we opening within yesterday's range or outside of yesterday's range? What is the actual trading range for the first hour? Okay, and then are NQ and ES in sync? When you put some simple things in place, you skip the first half hour to make sure you don't get run over. Once you're identified as an open drive, if you simply step out past the 930 mark, you'll tend to miss the majority of the carnage and be able to find the good trade setups, right? If you put all that together, that goes a long way to helping you stop drawing down every day, stop blowing up your account, stop being a break-even trader when you can identify some very simple things. Now, making profit, a little bit different story. You have to have You have to have good entries. You have to have a solid game plan. You have to have your mental game plan, your emotional game plan, and your physical game plan all in one place. The start of that is having the trade plan, which I post to my traders every day. The next part of that, which is very, very important, is I know what I'm going to do in terms of loss limit and loss gain and exit plan prior to entering a trade. It makes my life infinitely easier. Anyways, I hope that helped a little bit. My name is Simon. I'm with Trade and Perform Coaching. I've been a professional trader for 17 years now, I think. It's been a long time, 1994. And my goal here is to help traders move from frustration to consistent profitability. Um, and if you'd like to join us in the room to see what we're about, you're welcome to email me at tradeandperform@gmail.com, or you can send me a message on the StockTwits or on the Twitter feed. More than happy to invite anyone free of charge for a week into the room. Anyways, I hope everyone had a great, great day. Hopefully everyone killed it. Get a good night's rest. Sleep's very important. Whatever happened today, learn your lessons from it and then forget about it. Come back tomorrow and execute. Hope everyone has a great night, and we'll see you all tomorrow. Bye-bye.